This is Horizon's Middle East and Africa, our top stories this morning. Asia follows Wall Street lower as investors pull back from the AI frenzy. The Nasdaq 100 closed down more than 3.6%, while the S&P dropped the most since December 2022. President Biden says it's time to hear new and fresh voices in his first public remarks since dropping out of the race. And Israeli Prime Minister Benjamin Netanyahu gives a fiery defense of his nation's war in Gaza in a speech to the U.S. Congress. It has just gone 8 a.m. across the Emirates. I'm Jemana Bersachi over here in Dubai. Let's get you up to speed on these markets because we had some really massive moves yesterday. A major pullback for the S&P, down more than 2.3% in the session. Its biggest drop since December of 2022. So you have to go really far back to get a sell-off of this magnitude. Nasdaq also in focus. Very strong pullback there, the biggest since October 2022. So again, really just highlights how big of a pullback we saw yesterday, down 3.6%. Obviously in focus were Tesla and Alphabet, those leading the declines. But what we got actually in the end was a pretty broad-based sell-off in the rest of the tech space. So some of those chip names also were coming under selling pressure. That was the theme that continued into Asia overnight. Dollar yen also, we're keeping a very close eye on this currency pair. As you can see, we've scaled back almost 10 big figures in the last couple of weeks. We're trading above 160. Now we're getting close to 152. Another 1% firmer overnight as traders look to unwind some of their carry trades and into expectations of a hawkish Bank of Japan next week. We will talk more about that in the coming days. And then Brent also in focus, cannot seem to get a sustained bid. Once again on the back foot, down about 0.75% this morning. I also just want to draw your attention to this, the shape of the yield curve as well. 230s, we spoke about this about a week ago. It was close to disinverting. Well, now we have fully disinverted. We're back in positive territory, trading at around 13 basis points. That curve continues to steepen. And even if you look at 2's 10s, we're also close to disinverting there. It's still negative now, but the curve continues to move higher and higher as traders settle in on the September cut being pretty much a done deal and further interest rate cuts to follow, while the back end of the curve continues to see upward pressure. But let's also check in on how markets in Asia are faring as well. Avril is in our Singapore studio standing by. Avril, what are you watching out for today?
Well, Jemana, we've been watching that yen rally, right? But you've talked about it. So let's also discuss what we're seeing in Asia stock markets. The selling is really bad today, and it's not just the chip as well as the tech stocks that are getting hit. It's spreading to almost all 11 sectors of the region stock benchmark as this AI narrative seems to be turning, right? Investors are reconsidering not just the sector, but any assets that are seen as risky. So a lot of selling in stocks, but today, we're also seeing the PBOC surprising with a rate cut on its one-year policy loan rate just a few days after it already cut the reverse repo. And the Chinese currency is holding pretty well, all things considered, firming towards the 726 level. This is against the backdrop of a slightly softer dollar. Jemana.
Avril, thank you so much for the overview. Risk off prevailing in overnight markets. Let's turn back to politics, though. The main story over the last 24 hours that President Biden has framed his momentous decision to drop out of the 2024 race as a bid to unify the nation under a new generation of leaders. Biden spoke from the Oval Office in his first public comment since ending his re-election campaign.
In recent weeks, it's become clear to me that I need to unite my party in this critical endeavor. I believe my record as president, my leadership in the world, my vision for America's future, all merited a second term. But nothing can come in the way of saving our democracy.
For more on this, Bloomberg's Vonnie Quinn joins us now from Washington. And Vonnie, that was yet another historic moment in U.S. history, another momentous moment. We've seen several of them in the last couple of weeks. But it did sound as though President Biden was equally sad, but also optimistic about the future of what this new generation of Democrats can bring.
And I think that was a very calculated move. It was a very calculated speech, Jumana. If you notice, he didn't actually make mention of illness as being a reason for him stepping out of the race at all. He just said it was about passing the baton. And this is 6 days after he went into isolation for COVID-19. So he's coming back into a new world, as you said. He used some of the speech from the Kamala Harris Slump speeches. In other words, looking towards the future as opposed to the past. That's a line that she has used. And it was a speech that was heavy on the defense of democracy as a theme, almost as if in the background there is a threat to democracy, right? So he didn't specifically mention another candidate or the race in any great detail, but he did tell the American people the defense of democracy is more important than any title. The great thing about America is here, kings and dictators do not rule, the people do, the power is in your hands. So he very much handed it off to the American people to sort of take it from here, even as we know he's going to continue on the campaign trail and run his presidency. He has 6 more months to go. It will be a lame duck presidency, so it's questionable as to how much he can actually achieve. But that's one of the reasons why he perhaps wasn't so nostalgic and didn't so much concentrate on achievements to date.
Yeah, well, there's still another 6 months to go, as you rightly point out. But the race does seem to be tightening. We spoke about this yesterday. Some polls I saw overnight are even putting Harris ahead of Trump. President Trump himself was delivering a campaign rally in Charlotte, North Carolina. What did he have to say yesterday?
Yes, a lot of rhetoric that was very negative towards the Kamala Harris campaign. He obviously can't wait to debate her as well. There's maybe as many as 3 debates in the works now. Potentially Fox has proposed one, and NBC seems to want to have a debate as well as the original ABC debate that had been scheduled. That's all yet to be determined. But Donald Trump going on the attack, some of these attacks we've heard him use the moniker Lion Kamala Harris, for example. He mispronounces her name repeatedly, which is, an extraordinary thing to do to another candidate. He calls her a radical left lunatic and says that she's far more left than Bernie Sanders, for example, scaremongering those who are feeling the impacts of inflation. Now, for sure, Kamala Harris is going to have to come up with some better defences on these perceived vulnerabilities, not just on the economy and on inflation, but also on immigration and the border.
Yeah. Well, it doesn't look like it's going to calm down at all in the next couple of months. So I'm looking forward to hearing further reporting from you, Vonnie. Thank you so much. Vonnie Quinn from Washington. Now, also in Washington, D.C., Israel's Prime Minister Benjamin Netanyahu has given a fiery defense of his nation's war against Hamas in a speech to Congress in Washington. Now, he also called out thousands of demonstrators outside protesting his handling of the conflict in Gaza.
Iran is funding the anti-Israel protests that are going on right now outside this building. Not that many, but they're there, and throughout the city. Well, I have a message for these protesters. When the tyrants of Tehran, who hang gays from cranes and murder women for not covering their hair, are praising, promoting, and funding you, you have officially become Iran's useful idiots.
Very strong-worded comments there. For more on this, let's bring in Bloomberg's Galit Alstein, who joins us now from Tel Aviv. Galit, just give us a summary. What were some of the highlights of that quite fiery speech that Netanyahu delivered to Congress?
Yeah, so I think, in essence, Netanyahu's speech can be split into what he said and what he declined to say. In terms of what he did say, as we just heard, he made a big point of speaking about Iran, who is behind multiple proxies in the Middle East, including Hamas in Gaza and Hezbollah in Lebanon, which Israel has been fighting since October 7th, as well as the Houthis in Yemen and other militias in Syria and in Iraq that the U.S. and other Western allies, as well as a group of moderate Sunni Arab countries, have all been fighting in recent years. He said the world is at a historic crossroads. This is a clash between barbarism and civilization, those who glorify death and those who sanctify life. And he made a point of how the U.S. and Israel must stand united to win this axis of terror. The U.S., he said, was the only nation standing in Iran's way to spread its revolution throughout the world. And he made an argument that Israel was not just defending itself, but also helping to defend the United States.
I mean, the backdrop, as the Prime Minister even referenced himself, was one of controversy. There are plenty of demonstrations taking place. And also, there were demonstrators outside Capitol Hill calling for the secure release of hostages. What has been the reaction to the speech back home in Israel?
So maybe that has to do, as I mentioned just now, with what Netanyahu did not clarify or did not say in his speech. He did not say what his stance was in the current ceasefire negotiations that would also involve the return of Israeli hostages from Gaza. Hopefully, he did not give any detail or even a general statement saying where things stand on that and what are the sticking points. He just said that generally talks are still underway. However, in reality, these talks have been stopped with the Israeli negotiating team not due to resume them until early next week. These talks will be a major issue in Netanyahu's meeting with U.S. President Joe Biden today. And speaking on Gaza on the day after the war, Netanyahu did specify a general vision of a demilitarized and de-radicalized Gaza, the way Germany and Japan had been after World War II. And he still did not say who would be taking the reins after Hamas is removed from power there. And finally, he did speak about a broader vision of the Middle East, describing an alliance against Iran, an extension of the Abraham Accords. He called it the Abraham Alliance, but he gave no detail on how that could work, given that Arab countries meant to be included in such an alliance insist on a two-state solution for the Palestinians, something that Netanyahu's government, his current government, refuses to talk about. So I guess the reaction in Israel, to very briefly sum it up, is on the one hand, Israelis did take some pride in this speech. This was a sort of historic event because Netanyahu became yesterday the first world leader to ever address Congress for 4 times. And at the same time, back home, large portions of the public are thinking that more needs to be done in terms of releasing Israeli hostages and seeing how this war wraps and what comes next.
Yeah. Bloomberg's Galit Alstein, thank you so much for the overview. Well, plenty of insightful conversations still coming up on the show. We're going to be discussing the tech-led sell-off with Standard Chartered's Eric Robertsen, and we'll get an assessment of the commodities picture with Crystol Energy's Carole Nakhle. We will also speak with Abu Dhabi Islamic Bank about its big profit jump. Acting Group CEO Mohamed Abdelbary joins us later this hour. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The AI fever is cooling as the market asks when its massive investments in the much-hyped technology will start to pay off. The Nasdaq shed $1 trillion. That is a huge number in market value in the U.S. session, led by the AI darlings Nvidia, Broadcom, and Arm. So big sell-off occurred in the overnight session. Let's bring in Eric Robertsen, Managing Director, Global Head of Research, and Chief Strategist at Standard Chartered Bank. Great to have you with us, Eric. I do wonder whether you see legs to this risk-off sentiment that seems to be prevailing, or the last couple of days seems to be dominating, and really precipitated by this very large pullback we're seeing in tech stocks. Do you think that continues?
Yeah, look, absolutely. I think there's something that has changed over the last couple of weeks, which is the market's perception of global growth. The first point is that economic growth in China looks to be softening even further. We're starting to see some evidence of a softening or even a further slowdown in the U.S. We're seeing continued challenges in Europe's economy. And so we've gone from a very happy place in terms of the soft landing to people starting to wonder if there are some greater downside growth risks. And the growth stocks of the world, especially tech, are a key part of that. So I think there's some risk to the downside on
Right. It makes sense if you look at it through the context of growth. And if growth is declining, then the growth stocks are going to suffer as well. What about this concept of U.S. exceptionalism? For so much of this year, the USD was outperforming. Up until a few weeks ago, the market was not coming around to the view that the Fed were getting closer to the cutting cycle. But of course, that has now changed.
100%.
Does this put downward pressure on the USD versus other currency pairs?
Look, I think there's two factors that we need to think about for the dollar. The first is U.S. asset outperformance, which, as you said, does look like it's starting to normalize a little bit. Now, I'm not sure that changes the dynamics of the dollar completely, but then when you add in the discussion around U.S. rates, now we do think the Fed cuts a couple of times this year. U.S. rates have already reflected that. I mean, if you look at the forward curves, it's now priced in. And so our view is that a lot of the factors which have held up the dollar over the last year are probably still in place, but at the edges perhaps have softened a little bit. I think to get a real weakening in the dollar, you need to believe that the Fed is going to cut more than what's priced in.
Yeah, in which case we're talking about recession or
Correct.
A very, very sharp tilt
Correct.
in the growth data. And then it's a whole different ballgame.
100%.
Let me ask you about your view on dollar yen. It is a big focus for traders going into next week. I was reading reports somewhere 90% of analysts are expecting the Bank of Japan to hike. Is all of this price action we're seeing just in expectation of what the Bank of Japan can do, or is it a positioning unwind?
I think it's the latter, to be honest. I mean, look, let's talk about the Fed and the Bank of Japan. If the Fed cuts 50 basis points this year, the Bank of Japan raises rates one time this year, I mean, does that really do a lot to the big rate differential? Probably not. But what I think you are seeing is, in combination with that growth sentiment change, an unwind of some of the widely held positions in the marketplace, whether it's technology stocks or short yen, short Swiss, things like that, you're seeing a bit of a normalization in some of these positions. And we all know dollar yen's been pretty widely held.
Yeah, are carry trades back? Is this going to be the
They
theme
were.
But is this going to be theme looking ahead now that all central bank, most central banks around the world are getting into their cutting cycle?
I think the early stage of the cutting cycle will raise some questions about the carry trade in the very short term, because essentially what you need in a carry trade environment is relatively low volatility. Now, we're moving into a part of the cycle where, as we're seeing with tech stocks, volatility is picking up. And whenever vol is high, the appeal of carry trades is going to go down. Now, when the dust settles, maybe it's in 2 months, maybe it's in 6 months, who knows? But when the dust settles, we go back to looking at rate differentials. And there are a number of places in the world where they will still be relatively healthy and attractive.
Let me just round up our discussion asking about dollar renminbi. I get the sense that many out there were a little disappointed that, about what came out of the plenum, and that some of the announced measures would be enough perhaps to put a floor under the property market, but aren't really sufficient to stimulate demand in a way that many were hoping for. What does that mean for the markets that you follow and for the renminbi?
Look, the broader point that we would make is that the plenum, in our view, was not going to make any groundbreaking announcements, certainly with regards to supporting of the demand side of the equation and growth. So our view is that economic growth in China remains relatively soft. Now, for RMB, what that means is that rate differentials with the dollar will remain dollar supportive, right? And so our expectation is that RMB is going to struggle to outperform other currencies. For growth more generally, we look at Asia, and what concerns us a little bit is that if China is really going to be in the bottom end of its growth range, the implications for the more trade-dependent economies like Korea, like Taiwan, like Singapore, is a little bit more suspect to the downside. So it does provide some growth questions.
Yeah, so interesting. I would love to continue the conversation, but we'll leave that for another time. Eric, thank you so much for coming on today. Eric Robertsen, Managing Director, Global Head of Research and Chief Strategist at Standard Chartered Bank. Thank you. Also coming up, Kenyan President Ruto announces a new cabinet, which includes members of opposition parties. We discuss if it's enough to stop protests next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Turning to Kenya now, President William Ruto has appointed the opposition party leader as his finance minister. Continuing with the overhaul of his administration, Ruto has also allocated different opposition party members to head up key departments. The changes fulfill Ruto's pledge to form a so-called government of national unity to garner wider public support. For more, Jennifer Zabazaja, our Africa correspondent, joins us now. Look, we've been monitoring all of the developments in Kenya very closely. This seems quite interesting and perhaps even controversial from a government standpoint. The fact that he's appointing the leader of the opposition party as his finance minister, is that going to be enough to keep these protesters at bay?
That's right, Jumana. It is quite interesting, and you have a lot of mixed reaction in particular, especially when you think about the opposition party. And the person who he appointed, John Mbadi, as finance minister, is one of the chairmen of the main opposition party, but also very close to Raila Odinga, who has in the past sort of worked his way into also being in a coalition-type government. And so the question is, as you were mentioning, will this be enough? We do know that President Ruto had sacked nearly all of his previous cabinet. And so now that he is bringing in some opposition members, not just John Mbadi, but there's also a number of others who he's bringing in, 3 others in particular, into key positions. The question is, will this be enough in terms of will this be enough for people to think that he is actually taking a lot of these concerns that the public has been talking about seriously? And what's interesting is there has been a time in the past where we have seen something similar in terms of the main party linking up in a so-called broad-based government similar to this. But before it was mainly to assuage people who are in the political space. This time, of course, we know that many of the people who have been expressing concern are a lot of the young people, are a lot of Gen Zers who have not been pleased with the president. Currently, his cabinet does not have any Gen Zers. He does have a 32-year-old who he appointed, but he could continue to face some pressure, especially when you think about some of the pressure that he is facing in terms of the budget and the deficit that the situation that the country is in right now.
And Jen, very quickly, do we have an understanding of what the opposition leader's fiscal priorities are going to be? Because ultimately, this started off as a fiscal problem.
Right. I think we're still waiting to see that. And in particular, if you take a look at John Mbadi, he is an accountant by trade, so perhaps he comes in with a different perspective. But when you think about Raila Odinga in the past, he has in the past worked with President Kenyatta. And so perhaps he brings in some of the proposals that the opposition party proposed years ago when they were trying to campaign for the presidency in 2022. But the main question will be, how are they going to work towards what the IMF has asked Kenya to do, which is to bring down the deficit? If these tax proposals that President Ruto has had to scrap because of the protests are not going to be on the table, what then are they going to have to concede? So that is going to be something that we're going to pay close attention to, because that issue does not go away.
Yeah, we'll keep a close eye because things keep moving very quickly in Kenya. Jennifer Zabazaja, thank you so much for that overview. Right, also coming up, we're going to be talking about oil because crude futures are broadly joining this retreat in equity markets. We get the latest with Carole Nakhle, Crystol Energy CEO and founder. This is Horizons Middle East and Africa, our top stories this morning. Asia follows Wall Street lower as investors pull back from the AI frenzy. The Nasdaq 100 closed more than 3.6% down, while the S&P dropped the most since December 2022. President Biden says it's time to hear new and fresh voices in his first public remarks since dropping out of the race. And Israeli Prime Minister Benjamin Netanyahu gives a fiery defense of his nation's war in Gaza in a speech to the U.S. Congress. It has just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. We had a huge pullback in Wall Street yesterday with the S&P closing more than 2.3% lower, biggest drop since December 2022. The Nasdaq, the tech index, down 3.6%. Again, biggest drop since October 2022. A lot of focus on Tesla and Alphabet. We spoke about that yesterday, but throughout the course of the trading day yesterday, dropped quite dramatically. Tesla down more than double digits throughout the course of the trading session. Alphabet as well. Keeping a close eye on dollar yen as well. The currency pair, as you can see, the yen continues to gain versus the USD. We're now about 4% firmer over the last 2 weeks or so, about a 1% move overnight. This in anticipation of Bank of Japan meeting next week and unwind of some of those carry trades put on. And then finally, oil, as you can see, also slipping in the overnight session today. Brent is now trading close to $81, down another 0.8%, despite the fact that we saw that drawdown in U.S. stockpiles. We will be talking about oil momentarily. Our terminal chart today, I just want to draw your attention to what's been happening with the U.S. yield curve. One of the favored or most preferred trades into the election has been this Trump steepener, so to speak. 230s, as you can see, continues to steepen. We are now fully disinverted. The curve is trading at around 13 basis points, and we've moved quite a lot just in the last couple of weeks, because it wasn't that long ago that we were talking about this trading close to zero. So through the course of the last couple of days, we have rallied, steepened, I should say, about 14 basis points into positive territory. That's also happening with 210s, though that part of the curve is still negative. Let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, what are you watching out for?
Yeah, Jumana, the Asia sell-off is really, really bad today. I mean, as the narrative surrounding AI turns, we're seeing investors pulling out money of not just the chip, the tech names, but now all 11 sectors on the MSCI Asia Pacific are in negative territory, and deep losses in Japan as well as South Korea. Mind you, on the Kospi, SK Hynix fell as much as 8% earlier today, and that's despite coming through with solid earnings. In China, that stock rout was already underway, and we're seeing that bleed still, despite the PBOC today surprising with a cut to its one-year policy loan rate. Let's flip the board to talk a bit more about that. This cut to the medium-term lending facility was one that was unexpected. It wasn't set for review until the middle of next month. It does bring the rate closer to the yield on the 10-year in China, but it's also worth considering how this is coming just days after a surprise cut to the reverse repo and Chinese banks cutting their loan prime rates as well, to some this point and reeks of perhaps some panic moves from the PBOC, and might actually have the opposite effect on stock markets and boosting confidence. Jumana.
Very interesting context there. Avril, thank you so much for giving us the latest on some of these overnight markets, deep red markets in Asia. Now, oil is also trading lower after snapping a 4-day decline in its previous session, as a soft outlook for China outweighs lower U.S. stockpiles. However, futures remain higher year to date as OPEC Plus presses on with its output curbs. Let's bring in a friend of the program, Carole Nakhle, Crystol Energy CEO. Great to have you with us, Carole. Good morning to you. First of all, what do you make of the price action in oil the last couple of weeks? It can't seem to get a sustained bid, even though summer seasonals would dictate a bullish backdrop over here.
Absolutely, Jumana. I mean, typically around this time of the year, we'd expect prices to trade a bit higher than what we are seeing today because of the seasonality of the demand. People traveling, people are driving, and that by itself should boost demand. Plus, on top of that, you have the hurricane season, and an important player in the world that is in the U.S. And add to that the ongoing geopolitical turmoil, the war in Ukraine, the war in Gaza, the Houthis, Israelis attacks, etc. So overall, one would expect prices to be higher than the level that we are seeing today. But these levels today confirm what many have expected in terms of weaker outlook for demand, that yes, the demand is stronger perhaps than earlier this year, but it's not strong enough to compensate for the additional supplies coming to the market, particularly from non-OPEC plus suppliers led by the US, but also Guyana, Norway, Brazil. So the market at the moment might feel tight, but we are expecting it to become more balanced towards the end of the year. And also next year, we're expecting a surplus, assuming other conditions remain the same. So that by itself is exercising downward pressure on prices.
And Carole, what does this all mean for OPEC Plus decision-making? Given what you outlined vis-a-vis the weakish demand or the signals that are coming through from China, in addition to non-OPEC supply getting ramped up, do you think this means that it's going to be very difficult for OPEC Plus to actually start putting extra barrels back to the market in Q4?
Well, interestingly, OPEC still believes that demand is going to exhibit a very strong growth this year and also maintain relatively strongish growth for next year. And if you look at their forecast for oil demand, you can see that they are the most ambitious in terms of outlook for oil demand for this year and also next year, higher at least by around 1 million barrels a day compared to other institutions such as the IEA. So if we stick to their forecast for oil demand, we can feel that they are going to stick to their policy of maintaining their major cuts for until the end of next year, but also starting to unwinding gradually some of the voluntary cuts. Now, they're not going to put all the barrels in the market, but even that decision already sent bearish signal to the market when it was taken. And I'm not quite sure they are going to roll back, especially given the uncertainty at the moment with geopolitics. And maybe the scene is going to change differently next year. And there is also China. China remains a massive wild card. I don't see structural changes in Chinese economy before at least a year or two from now.
Yeah, and of course, you know, when that OPEC Plus decision came out, they did caveat it by saying subject to market conditions, which is a huge out for them if they want to use it. Let me just bring you on the subject of U.S. politics. I'm sure you watched that Trump speech last week at the RNC when he talked about drill, baby, drill. Since then, we've spoken to many analysts, and they say that it's actually going to be quite difficult to get U.S. production even higher than it currently is. Where do you stand on that debate? Are we about to see ever more production coming out of the United States?
Oh, look, I mean, definitely drill, baby, drill, and President Trump promising levels of production not seen before. I am a little bit more optimistic than maybe money market observers when it comes to U.S. production, because over the years, people have been quite pessimistic about the outlook for shale and continue to surprise. However, it's not limited to government policy. It's clearly responding to market realities, market signals. So if prices remain supportive, then yes, why not? We'll continue to see higher production in the U.S. But we have to remember, it's not whether it's Republican in charge or a Democrat that's going to make a huge difference. Despite the rhetoric, we should remember that the shale revolution happened under President Obama, a Democrat. Shale hit record production level under President Biden, despite the anti-oil and gas industry sentiment. So while a Republican like Trump can boost sentiment in the industry, at the end, it is what the market is dictating and the signal it is sending to investors. And also, it's not just about the U.S. What Trump, if he becomes president, what his relationship with Russia is going to look like, his relationship with Iran is going to look like, because we know very well that under Trump, Iranian oil exports fell down to 500,000 barrels a day, whereas they increased under President Biden because of weaker enforcement of sanctions. And also Trump's relationship with China. What does that mean to global trade and as such to global demand and the economy, oil and other commodities as well. So it's not clear cut. We have to wait and see. And who knows, maybe Harris becomes the president and she might maintain the policies of President Biden.
Exactly. That was the question I was going to ask you about, you know, what a Harris presidency would mean, because if you listen to the comments, most recently, former President Trump was delivering a campaign rally in Charlotte, and he was accusing Kamala Harris of being too pro-environmentalist, anti-energy. But then again, you just need to look at the track record of the last 4 years to see and identify that U.S. production has done nothing but go up. How do you think that changes under potential President Harris?
We are yet to really understand better Kamala Harris' policies vis-a-vis the energy sector. But if I look at the Biden-Harris administration, yes, I see that from the beginning, as soon as President Biden assumed office, he kind of suspended and banned new oil and gas leases on federal land. Then, you know, earlier this year, we saw that the administration also stopped approval for new LNG terminals. So, and they have been also accusing the oil companies of war profiteering in 2022 when the companies reported massive profits. So there is the rhetoric that is pretty much anti-oil and gas and more pro-green, especially with the IRA, the Inflation Reduction Act. But on the ground, the reality speaks differently. They tell us that the oil industry has actually boomed under the Biden-Harris administration. That does not mean that Harris is not going to send maybe a cautious sentiment to investors in the oil and gas sector. But the U.S. is a free economy, is a competitive market structure, and they will respond to market demand if it is there.
Yeah, very fair. Carole, thank you so much. It's always a pleasure chatting to you. Carole Nakhle, Crystol Energy CEO. Thanks very much. Well, also coming up, Abu Dhabi Islamic Bank's second quarter earnings are in, showing growth across all business segments. We speak to the acting group CEO, Mohamed Abdelbary, next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Abu Dhabi Islamic Bank has reported a 29% year-over-year rise in net income for the second quarter. It says business volumes across all segments and products was strong and strength continued in fee-based businesses. Joining me now is Mohamed Abdelbary, Abu Dhabi Islamic Bank Acting Group CEO. Good morning to you, sir. Great to have you with us. So let's just remind viewers of those numbers. The net income for the second quarter came in at 1.58 billion dirhams. That's versus expectations of 1.2. So a beat has come through.
Absolutely.
Where did the strength come from?
So first of all, thank you, Joanna, for having me on the show today. We had a very strong quarter two as signaled to the market. We have managed over half and half to increase our net profit before tax by 40% and 30% after tax. The quarter two has been characterized by strong volume growth, particularly on the retail and corporate banking side. So we've managed to take market share, particularly on the home finance, personal finance side on retail, but corporate we have seen particularly strong growth on the GRE sector, which has really helped fuel the business performance and deliver such results.
Let me ask you about the retail borrowing, because borrowing costs are still pretty high. The Fed hasn't started its interest rate cutting cycle yet.
Absolutely.
How is that affecting demand, if at all?
It hasn't really affected demand as much because it's a reflection of the market dynamics as well. So where the growth is coming from, if I talk about the property market, for example, we have seen very strong performance, whether it's in Dubai or Abu Dhabi or in the other Emirates, which is a reflection of the client's appetite and confidence to also call on financing, which we have been able to grab market share as well.
Can I just ask you what you're thinking about provisioning? Again, the provisioning cycle within UAE banks has been low the last couple of years.
Yes.
Do you think about the potential for increasing the amount of provisioning into upcoming years, just given the state of the global economy and considering that growth has started to actually show negative signals?
Yeah, so it's not uncommon that after a period of high rates that there will be a cycle of slightly higher provision as the, I would say, the pressure on financing cost on clients will kind of start to show. Now, that usually happens after the easing of the cycle. So maybe next year we could see some impairments or provisioning rising up. For Adib in specific, because our client base in retail are predominantly UAE nationals and our corporate book is predominantly GREs, we are less concerned about that, but I wouldn't be surprised if the market itself would see some rise in that area as well.
What happens to your margins once the Fed start cutting interest rates?
So our margins so far has been a good story. We have maintained our net profit margins at 4.6%, which is up from last year of 4.4%. As rates start to reduce, I think we're expecting probably 2 cuts, maybe now September and November.
Yeah.
It will take some time to reflect in our net profit margins. So next year, I believe that margins, or there will be a compression, not only from lower rates, but also from market competition. So there could be pressure on margins next year, definitely.
Yeah, I think that's the read across all banks, not specific to Abu Dhabi Islamic Bank. I know you have an active presence in Egypt. How has the stabilization of the currency given you a tailwind in the past quarter?
So it's been a very welcoming move. I think it has addressed the issue of the parallel market, which we have seen for a long time. So at least now the currency versus the dollar has stabilized at around 48, 49, so it's hovering around that level. Also, the boost in terms of the FDIs, which are coming in from the GCC and US specifically, has been very welcoming. We have seen client pickup. Adib Egypt will be announcing its results. It's a listed company, so very soon, but the results have been very strong for the first half.
How would you say your market share is in Egypt? Are you looking to increase the market share?
So we actually have increased market share over the past, I would say, 12 to 18 months. We have also increased our presence in Egypt. We have almost 60 branches. Our market share in Egypt is around 4 to 5%. But we are the prominent Islamic bank in Egypt, and we do offer a very creative value proposition for our clients as well.
Would you think about potential M&A to expand further in Egypt or within the region?
So M&A is always on the table. So we always think about organic and inorganic growth for Adib in specific. Wherever we see an opportunity which makes sense for us inorganically, we look at it. At the moment, there's nothing really to be addressed, but if something comes up, it's capital accretive, it's good for the franchise, definitely we'll look at it.
And of course, predominantly, we've been talking about your local ambitions. Do you have any broader international ambitions for the bank?
Absolutely, we do. But what we do in Adib is that I think the traditional way of entering markets by usual acquisition is not really what Adib usually looks at, but the digital, leading with digital capabilities, looking at portfolios is probably a better way, in our view, to gain market share and presence internationally. Having said that, if something comes up which is interesting for us, we look at it definitely.
Let me just sort of round up with the discussion about geopolitics, because it is a major topic that we talk about all the time now. We've been following what's been happening with U.S. elections, the possible return of Trump. How, if at all, have geopolitical developments and also the regional war, how has it impacted sentiment, do you think, for your clients?
So because we are predominantly, our clients are predominantly UAE nationals on the retail side, and on the corporate side is also GREs, we haven't seen such an impact on their sentiment or confidence. If anything, actually, we have seen volumes picking up from that. So whether the election go either way, I'm not sure that we will have really an impact on our performance as well.
Very fair. Sir, it's been a pleasure chatting to you. Congratulations with another strong quarter. And I'm sure we'll catch up with you the next quarter to see how things have gone. Mohamed Abdelbary, Abu Dhabi Islamic Bank Acting Group CEO, thank you. Well, just in the last few minutes as well, we have just got results from another bank. So let me just bring you the results from first Abu Dhabi Bank. So the profit for the quarter has come in at 4.3 billion dirhams. That is higher than the estimates of 3.9 billion dirhams. So we have broken through estimates to the upside there. Some commentary, the FAB CEO says they are actively building, expanding their business corridors. They are on track with 2024 medium-term guidance return on tangible equity. On impairments, they are actually up 33% year-on-year. Second quarter impairments coming in at 896 million dirhams. The operating income, again, this is high level, 7.76 billion dirhams, much higher than the estimate of 7.55. So what we are getting from FAB, so first Abu Dhabi Bank, is a beat on the top line and the bottom line as well. The impairment number, perhaps something to watch, though, up 33% year-on-year. As you can see, most analysts have a buy rating on the stock. Also coming up, preparations in Paris are in full swing as the city gears up for tomorrow's Olympic Games opening ceremony. We are live in the French capital next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, the Paris Olympic Games opens tomorrow amid heavy security, and excitement is building in the French capital. Hotels have slashed prices 41% from the peak 11 months ago to attract Olympic visitors amid weak demand for tickets. For more on this, Bloomberg's Caroline Kona joins us from Paris. First of all, Caroline, let me ask you, with everything that's gone on politically, what's the mood actually like into the start of these Olympic Games?
You're totally right. It's a pretty strange atmosphere. We're just 1 month after the snap elections, which left France with a hung parliament. But President Emmanuel Macron has called for an Olympic truce during those games, and Gabriel Attal, the current Prime Minister, will remain as a caretaker until at least mid-August, after the Olympic Games. So a little strange atmosphere on the political front, but obviously the city is gearing up. We've got the opening ceremony tomorrow on a Friday. For the first time in the city, not in a stadium, but in the city along the Seine river. So pretty exciting moment for Parisians. It is the first time that Paris is hosting the games in 1 century. Last time was 1924. It is also the first time we have the Olympics in real life in 8 years, because remember, during Tokyo you had the pandemic, so you had no spectator, no public, so very different atmosphere. As many as 15 million visitors are expected during those games, but as you mentioned, not such a boost in terms of hotels, in terms of airlines, because a lot of those tourists, those wealthy tourists who usually come to Paris during summer, are this year avoiding the games.
Staying away. You know, there are many other countries that declined to host the Olympic Games because of the sheer cost of taking it on. Bruno Le Maire mentioned that he wanted to keep costs low. What has it cost France in the end? Have there been any economic benefits to speak of?
So the cost of these Paris Olympics are estimated between 10 and 12 billion euros. That's approximately the cost of the London 2012 Olympics. And according to some Allianz research, the economic benefit would actually be also around 10 billion euros in terms of the impact on GDP, and in terms of the spending, public finances should not be too much impacted. There's been about 5 billion euros of public money spent, but that should be compensated by the extra VAT sales and the amount that visitors and tourists are going to spend in the French capital during those games. However, as I was mentioning, some hotels, some airlines are not totally at full capacity. The airline Air France KLM, for example, who's also a sponsor, has already warned about nearly 200 million euros of revenue shortfall during those games because of those international tourists avoiding Paris during the games. Still, in the longer term, some research are saying that the economic benefit of the games could actually last up to 10 years after the games.
Well, remains to be seen. I guess we'll check back in a decade. Caroline, thank you so much. Thanks for the reporting. And with that, we're wrapping up our show. That was Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.